is Sam. Sam wants to invest some money for retirement, but doesn't know where to start. This is Casey, Sam's neighbor. Casey wants to open a lemonade stand. Casey can either borrow money to pay for it or find investors to help him. Casey decides to sell stock of his lemonade stand. A stock is a piece of ownership of a company. Sam can buy stock from Casey, making him a partial owner of a piece of the lemonade stand. If the lemonade stand is successful, the price of the stock will increase, and Casey can give Sam dividends to provide some income. A dividend is a share of profits that a company pays to its shareholders to reward them for their risk. Dividends are not guaranteed. It's up to the company if they want to pay the shareholders dividends. If the lemonade stand fails, the price of the stock will fall. Another option that Casey has is to issue bonds. If Sam decides he wants to buy a bond, he would loan Casey money to build his lemonade stand. A bond is an IOU to a company or government entity that uses your money with the promise to pay it back with interest. The interest is paid periodically, like semi-annually, until the bond matures. Bonds have historically returned less than stocks, but usually have less risk. Bonds are considered less risky than stocks because they are a legally binding loan. So if the company fails, bondholders will receive at least some of their money back. By comparison, if stock price falls to zero, there's no guarantee that it will bounce back. Bond investors get their money back when the bond matures. Stock investors have no guarantee that the price of their stock will go higher. It can go lower, and they would not get their original investment back. A third option that Sam has for investing is to invest in a mutual fund. A fund is a collection of stocks, bonds, or both. If Sam wants to invest in more than one type of company, he can pool his money with other investors and have a professional investment manager invest in a mutual fund. The investment manager buys stocks of companies that will benefit from the growth in lemonade stands, like lemon orchards, sugar companies, and container companies that provide cups or bottles for the lemonade. A fund is a cost-effective way to invest in more than one company. A professional investment manager collects money from several investors and invests in the stocks of companies that are expected to benefit from the growth in lemonade stands. There are thousands of types of funds that contain different types of stocks, bonds, or both, depending on the investor's needs. C&B can help you determine which type of funds are appropriate for your circumstances and risk tolerance. For more information about how to invest using stocks, bonds, or mutual funds, call the C&B Wealth Management Group or email Terry at tdaniels@cmbil.com.